When Egypt declared that it would be joining the BRICS bloc of nations, the decision sent a tremendous jolt through the global financial markets. As Egypt has always kept close relations with the United States, notably in terms of economic and military backing, many analysts and policymakers were taken aback when they heard the declaration. However, Egypt's decision to join BRICS signifies a dramatic shift in Egypt's foreign policy and a possible game-changer in the global political and economic landscape. BRICS is an acronym that stands for the Group of Emerging and Developing Economies. In this video, we will investigate the effects Egypt's choice has had, both on the US dollar and on markets worldwide. Why did Egypt decide to join the BRICS bloc? Egypt's ambition to diversify its economic and political relations, minimize its dependence on the United States of America, and align itself with developing powers in the global economy were some of the primary motivating elements behind the country's choice to join BRICS. Egypt has been struggling with a number of economic issues over the course of the last few years, including rising inflation, high unemployment rates, and a widening budget deficit. The Egyptian government has been forced to look for new avenues of economic growth and development as a direct result of these issues. Egypt's goal in joining BRICS is to get access to the immense economic resources that the BRICS bloc possesses, notably in the areas of commerce, investment, and the transfer of technology. Over 40% of the world's population and 20% of its gross domestic product are jointly accounted for by the BRICS countries. As a member of the organization, Egypt will have access to new markets, possibilities for investment, and technological expertise, all of which have the potential to contribute to Egypt's economic growth and development. Egypt's determination to lessen its reliance on the United States is one of the primary motivations behind its decision to become a member of the BRICS. The United States has been Egypt's principal supplier of economic and military help for decades, accounting for billions of dollars in annual assistance. This assistance has been provided to Egypt by the United Nations. However, this assistance comes with terms and constraints that limit Egypt's capacity to achieve its foreign policy objectives. These requirements and restrictions are of a political nature. Egypt is hoping that by becoming a member of BRICS, it will be able to lessen its dependency on the United States and diversify the sources of financial and political support it receives. This action also reflects a broader trend in which countries strive to move away from the traditional Western-dominated global system, which many countries view as being out of date and unsympathetic to their needs and interests. How has this affected the value of the United States dollar? The United States dollar experienced an immediate and considerable reaction once Egypt's intention to join the BRICS group was made public. Within hours after the announcement, there was a significant drop in the value of the United States dollar in comparison to other major currencies, such as the euro, the yen, and the yuan. This decrease was driven by a number of factors, including fears about the future of U.S.-Egypt ties, the possibility of a shift in world economic power, and the influence of the decision on global oil markets. Specifically, this decline was driven by concerns about the potential for a shift in global economic power. The possible impact on global oil markets was one of the primary factors that contributed to the drop in the value of the U.S. dollar. Egypt is a major oil producer and exporter, and its decision to join BRICS raises doubts about its future alignment with the Organization of the Petroleum Exporting Countries, which has traditionally been dominated by Saudi Arabia and other Gulf states. If Egypt were to switch its allegiance to BRICS, it might potentially upset the delicate power dynamic that exists inside OPEC, which would have enormous repercussions for the price of oil on a worldwide scale. The potential impact on relations between the United States and Egypt was another factor that contributed to the drop in the value of the U.S. dollar. Any change in Egypt's relationship with the United States, which has been the country's principal source of economic and military assistance for several decades, could have substantial repercussions for the region's stability and American interests in the Middle East. The decision to join BRICS reflects broader concerns about the United States' waning ability to affect the global, political, and economic system and its declining influence in the area. The potential for heightened volatility in global financial markets is one of the most significant effects that could be caused by this. The United States dollar has historically been seen as a safe haven currency, particularly during periods of economic uncertainty or political unrest in other parts of the world. However, this could result in heightened volatility and uncertainty in global markets as investors seek alternative currencies and assets to hedge against risk due to the drop in the currency's value. The possibility of higher inflation in the United States is yet another potential effect that may be brought about by the weakening of the U.S. currency. When the dollar's value decreases, the cost of imported goods and commodities, particularly those priced in other currencies, increases. This may result in higher inflation because businesses would likely pass on the additional expenses to their end customers. Inflation, in turn, can lead to decreased consumer confidence, less spending, and slower economic growth, all of which might have substantial repercussions for the economy of the United States and the rest of the world. After the financial crisis of 2008, the effects of a weaker U.S. dollar on inflation can be seen in real life. After the crisis, the Federal Reserve took a number of steps, such as quantitative easing and low interest rates, to boost economic growth and keep prices from falling too low. One thing that these policies did, that they didn't mean to do, was weaken the U.S. dollar, as investors looked for better returns in other currencies and assets. This caused a big rise in the price of goods paid in U.S. dollars, like oil and gold, which are often bought to protect against inflation. Inflation went up in the U.S. because companies passed on the higher costs to consumers. This was especially clear in the food and energy industries, where prices went up quickly. This put a strain on family budgets and made people spend less. Higher inflation had a big effect on the U.S. economy. It hurt customer confidence and slowed down economic growth. In response, the Federal Reserve tightened monetary policy by raising interest rates and shrinking its balance sheet. This was done to try to stop inflation and bring the economy back to normal. This shows how a weaker U.S. dollar could cause inflation to rise, and how important it is for officials to carefully balance economic growth and inflationary pressures. As the global economy continues to change, it will be important for lawmakers to keep an eye on what's going on and adjust to these new trends and dynamics. The recent decrease in the value of the U.S. dollar may also have substantial repercussions for the landscape of international trade and investments. Over 60% of the world's total foreign exchange reserves are denominated in dollars, making it the most important currency for international commerce and investment. It is possible that a decline in the value of the dollar will result in an increase in the usage of other currencies, particularly the yuan, which has been gaining popularity in recent years. It is possible that this will have a considerable impact on the patterns of international commerce and investment, particularly in Asia, where China is the preeminent economic power. In conclusion, the drop in the value of the U.S. dollar sheds light on the broader trend of a shifting power balance in the economy of the entire world. The emergence of emerging economies, notably in Asia, has resulted in a gradual movement away from the previous global order dominated by the West and towards a more multipolar and decentralized system. This transition has been brought about by the rise of emerging economies. This broader trend is reflected in Egypt's choice to join BRICS, which underlines the growing power of developing economies in determining the global political and economic environment. What are your thoughts on this matter? Let us know in the comments section below. If you enjoyed this video, be sure to hit that subscribe button before you go. Thanks for watching.